We were just talking about bond yields just a second ago. The benchmark jumping about 15 basis points after that hotter than expected jobs report, a lot hotter than expected, with two big events coming up later this week, CPI and the Fed decision on the same day. How do you see the markets reacting to higher bond yields today and possibly throughout the week?
Yeah, I think they'll probably linger right around where they are until we see what comes out of Wednesday. I mean, if we get a CPI report that's in line or a little softer than expected, that should bring that down some. So that would be, beneficial to starting to bring yields down, starting to calm the markets a little bit more after that hot employment report that we did get on Friday that was a little bit unexpected. And same with the Fed meeting. If we'll see what they come out, they're saying, where the dot plots look, most likely that'll look like fewer cuts expected going forward. But as long as rate cuts are still on the table and we get a reasonable CPI report, yields may tick down to some degree.
So, RaeAnn, it's Monday. I know the wheels are turning, but it's a lot of ifs in this whole scenario. You keep saying if this happens, if CPI is softer than expected, a lot of ifs. I do want to ask you, where do you personally stand when it comes to Fed rate cuts right now? Do you believe July is possibly back on the table? Last week, a lot of chatter about that.
No, I think July is a long shot at this point. We don't really see any rate cuts coming in the next few months, and most likely not until later this year at best. The Fed's going to want to see progress on inflation. Even though we've seen some economic metrics decelerating to some degree, we still need to see progress on inflation consistent over a few months, barring any kind of significant economic deterioration. But most likely we won't see a rate cut until the end of this year, and probably just maybe one would be our expectation before the end of the year.
Just to be clear, you mean post-election, or when you say the end of the year, possibly September? I'm not exactly sure what time frame you mean.
Yeah, I would say most likely November or December at this point. Okay. September's a possibility if we see, some changes in the economy. But right now, our expectation would be that it would be post-election.
All right. Speaking of elections, today we're going to be looking at Europe. Initial results from parliamentary elections show a growth in voting for the right-wing candidates. We're seeing equities in Europe trade lower. What's your view up on Europe right now and post, actually after this, I should say, not post this, but after this going forward, how are you going to continue to view just the action, the equity market there? Are you worried that this, conservative push may put the rally at risk?
I mean, it's certainly a concern, but at the end of the day, companies, it's really about the companies, what they're doing. There wasn't a majority. It wasn't what anyone expected to see, especially as it relates to France and Germany. But for now, we still think that there's room for Europe to move forward. And we've seen this year so far, European markets have actually been doing pretty well. And, they don't have the technology exposure that we have in the U.S. with the S&P. So if you kind of back that out and look at it on an equal weighted basis, it's been, performance has been good. And we expect that, once it makes sense to kind of rebalance and have some of that international exposure. The elections are a factor. It's something to watch. But right now, we don't view it as a major concern.
Not a major concern. Just out of curiosity, we often talk about Europe as a monolith. Is there one sector in Europe that you view more favorably than others? We typically invest more broadly across the sectors in Europe. Like I said, there's not as much technology exposure there, so it gives you some diversification towards, against what you have with an S&P exposure in the U.S. But yeah, we would look at just a broad healthcare, staples, technology, which is different than the technology we have here, but just investing across the European markets.